Hey, this is Mark the Meerkat in with the trades of the day. It was on Tesla, and it's called a death hook. Actually, it sucked me in, and then I had to reverse my position. Here we go. Tesla, here was the setup. Here was it opening, and it started dropping. And then I was starting to do a bull pullback here. So I had my trade set ready to go here at 188.06, and boom, it popped up there. Look at that sucker up there pop up. And so I went ahead and I got in at 108.06, and then I had my stop set down here at 186.17. But it shot up here, hit its head right here on this pivot line. This is the R1 pivot line, and then it pulled right back. So what I do is I pulled my stop up here, just under this 200 moving average area, right under here. After that first, these are 1 minute candles, by the way. So I immediately pulled it up, trying to eliminate as much risk as I could. And it snapped back, and then look at it, went back up, tagged it again, and then bam, just fell right down. So again, all the signs were there. It fit all of my rules for a bull pullback, and then it suddenly slammed back down and stopped me out here at 187.67 for minus 0.2%. So now then it starts to low base there, just briefly. So I said, okay, it looks like it's going to fall now that with this death hook usually means a reversal. So I went ahead and I set up a trade down here. And then let's see what happened on the next candle. Bam, there it goes. And I'm now in here at short at 186.96. 186.96 is where I got in here short. My stop is up here just above all this traffic area here at 187.90. So I'm have less than 1% at risk on this trade. And let's see what happens. So look at it, fall. And then look at that, bam. Now it's starting to low base here, right at the closing line. It's falling down here, and I've been moving my stop down. It's in the money now. I'm up here, just above where it was basing, is where my stop is in the money. And now what I'm going to do is I'm going to set up a trade to go short again, add to my position, because I have zero risk less than the first half of the trade. Here we go, set up the trade, and it popped me in, and I'm now added to my position, and I'm now short at 183.68. So I added to the stop that I had here, which is in the money for the first half of the trade, and it's so now I have less than 1% into the second half of the trade. And let's see what happened after that. Bam, starting to fall. I'm going to bring my stop down here. Now I'm break even on the second one. I'm in the money on the other one, and I'm going to follow this 8 EMA down here. Let's see, go to down. It just kept falling. Look at this. Fell down here over 4% from that high up there, and it's still falling here. I'm going to follow this 8 EMA down, and now I'm going to go to here, and then what happened is it found a low here at 183 area, and boom, there it goes. Took off and got me out at 163.68 on both halves. So let's take a look at this whole trade here. So we're in a bull pullback here. It broke out with nice big volume, and then it immediately pulled back on larger volume. That's called a death hook. Let's take a look at that death hook real quickly on freeonlinetradingeducation.com. Go to our free chart school, and then just go up here. It says chart school, and we go right to the chart school, and we go here over to trading patterns. And this would have been a bearish death hook right there. See that? Click on that, and here's a description of it. It's where you're in a bullish setup. And in my case, it was a bull pullback. It could have been a symmetrical triangle where it breaks out and then it falls down, and usually on larger volume. It is a reversal where now the market, look at this one, just crashed down, and this one popped out and then crashed down. Mine did it in one candle. So that's what's called a death hook, and you can look at it in freeonlinetradingeducation.com to our free chart school. So now let's take a look here at the short trade. I got in here short, and then it fell down. It started to base at the closing line. I had zero risk left in the first short trade, so I added to that. And then I followed the 8 EMA down with my stop as it rolled back up, broke that 8 EMA, I got out. So that first short trade was for 1.7%, and the second short trade was for 0.6%. So and then with the minus 0.2 on the long trade, this total net for these three trades was 2.1% in 27 minutes. Hoo-ah! So it's good to know about. Sometimes you can get sucked in on a pattern where everything lines up, but you need to be nimble. Trade well, and may your winners run.